Price charts as chaotic systems. Price charts in financial markets are chaotic systems. Complex nonlinear structures driven by sensitivity to initial conditions. Chaotic systems operate through fractal cycles composed of repeating patterns across multiple levels of time and scale. In such a system, even the smallest change in initial conditions can lead to vastly different outcomes, much like the butterfly effect. The flap of one wing triggers a chain reaction that influences the system's entire evolution. These initial conditions shape the future, and the future in turn creates new initial conditions. This is the fractal nature of chaos, an infinite structure of self-similar patterns through which order can be observed within apparent randomness. Pivot points. The market's initial conditions. In market terms, pivot points represent those initial conditions, moments of change where new energy is born. Each pivot point is influenced by the movement preceding it and shapes the movement that follows, forming a continuous causal chain through time. A proper pivot analysis is based on three consecutive candles. 1. The pivot candle. According to Wyckoff's theory, this is the spring or the manipulation before the move. It clears liquidity and prepares the ground for the next impulse. 2. The candle before the pivot represents accumulation or distribution depending on whether the pivot is at a bottom or a top. 3. The candle after the pivot, the liquidity candle, marking the emergence of new directional flow. Zones of power, precision, and confluence. Liquidity and accumulation zones are the targets of price, areas for renewed entry, continuation, or leverage relief. To understand their strength, one must analyze them through the fractal resolution of time. Higher time frames represent power. Lower time frames represent precision. The higher the time frame, the greater the influence of its pivots and candles on the overall structure. However, lower time frames reveal the fine details necessary for surgical precision. Mastery lies in merging power with precision, narrowing high time frame price zones, and identifying meaningful pivots within lower time frame accuracy. This is the art of the sniper trader, the union of force and focus. Blocks, liquidity generators, and confluence points. The price range of the candle before the pivot is called a buy block or sell block, depending on direction. The price range of the candle after the pivot is the liquidity generator. When these two ranges overlap, they create a unique energetic intersection known as a confluence point, a zone where smart money often concentrates attention and where the probability of a significant move increases. Conclusion: the market is chaotic but not without order. It operates within a fractal logic driven by initial conditions, pivots, and the dynamic interaction between liquidity and accumulation. Understanding this mechanism allows us not only to anticipate price behavior, but to perceive the order within chaos.